All right, welcome back to the last of our 3 financial statements for exercise 10-9. That financial statement is called the balance sheet. Okay, so with the balance sheet, what we're looking at collecting is information regarding our assets, our liabilities, and our owner's equity. So, again, very much the same, the who, the what, the when. The who in this case is still Job Connect. The what is a balance sheet. And the when, still December 31st, 2019. Okay, so if you remember from this, we're actually going to center the text of the word assets. By the way, if you want a little Microsoft Word shortcut, Control-E is the center command. And we're going to write the word assets. And then we're going to go down and we are now going to list all of the assets. So let me go ahead and show you those assets really quickly. And here they are. Cash and bank, accounts receivable, blah, 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 blah. Right? Those are all the accounts and their amounts are right over here. So we're looking at these as our accounts receivable accounts. Okay? So why don't we go ahead and plug those in right now. It's going to take a little bit of time to type it. You can sit and watch along. You can add them as I go. If you have your cell phone up, maybe just put it in the corner a little bit and just type along and follow along. So here we go. Cash and bank. All right, and the cash and bank has a $6,000 amount. We have accounts receivable. You know what? I'm going to do a little trick here because I can't spell that all the time. I'm going to copy that so I'm not redoing it all the time. CompuWrite. Systems, and we are expecting $1,000. That's what an accounts receivable account is. It means they owe us some money. Look at this. Control-V. I already have it ready to go. And then this one is Marquez Manufacturing. I don't know what they owe us, but well, we know they owe us $500. I don't really have anything to make up at this point in time. Whatever you want to call it. All right. Another accounts receivable. And this one is Roaring Rivers Water Park. I'm running out of space, so I'm just going to leave it like this. Water parks are closed anyway, so they owe us $600. And then our next accounts receivable is from M. Spencer, and he owes us $200. Hey, by the way, if you find that I'm putting a number in that's incorrect, put a comment in the YouTube command or the YouTube channel, and then I can go ahead and make changes. But I'm just looking back and forth on my book and my worksheet to make sure I'm right. So if you see me make an error, and it'll happen, you know, just give me a shout and we'll get it fixed, okay? So then the rest of my assets, office equipment, right? Standard office equipment, we have $7,000 worth of office equipment. We also have office furniture, and we have $5,000 worth of office furniture. Try to stay consistent, put a comma in there. We also have computer equipment, and it looks like we have $8,500 worth of computer equipment. So at this point in time, these are the 8 assets that I have. So we simply indent and we write total assets and we add those up. I'm going to pretend I'm doing the math in my head. Click, click, click. 28,800, right? Okay. So if you did the math yourself, great. If we had done it in Excel, we could have just done a quick calculation like this. Regardless, it's 28,800. Oops. So now we have our total assets. Remember, the purpose of a balance sheet is to see if we are in balance. Are the assets equal to the liabilities plus owner's equity? So let's move over to our liability accounts. Again, that's going to give, I like to put a little space in there. You don't have to. You could put liabilities right underneath total assets. Control-E, again, a little tip for you all to center text. It works inside and outside of tables, just so you know. And it's liabilities. Okay? This is money that we owe or is outstanding. All right? We've got a couple different accounts. These are typically accounts payable accounts. So accounts payable, and so I don't have to type that word over and over again. I'm going to copy that. And our first one is Micro Solutions Incorporated. All right, we owe them $2,800. Bought some computer from them, I don't know, something along those lines. We have another accounts payable account. This one is to Vega Internet Services. They came out and they fixed our internet issue we had, and they got us connected to a whole bunch of Wi-Fi ports and whatnot. We owe them $1,600 for doing that work. And we have one more accounts payable is to Wildwood Furniture. You can guess that we bought some furniture on account, meaning we'll pay it back. And we bought $2,000 worth of furniture that we owe. So these are the three liability accounts, and I can just go back here and show you where I got those really quickly. Here they are. All right, these are the three liability accounts, and the amounts that I just wrote down: $2,800, $1,600, and $2,000. I got those right. So now we just indent again a little bit, and we write total liabilities, and we add those together. I can do the math a lot quicker in my head on this one. This is actually $6,400. Okay, so now we've got the assets done and the liabilities. So the final one is the owner's equity. So again, I'm going to center the text, and I'm going to list my owner's equity. Well, the first thing we're going to do is Richard Tang's capital. Okay? Now, where does that number come from? Well, a lot of you will just want to go here and go, well, here it is, it's right here. It's $23,600. But you can't do the balance sheet until you complete the statement of changes in owner's equity. Mr. Tang has a new ending capital, and that's right here. We just did that in the previous exercise. So $22,400 is our new ending capital because it included our new income and our withdrawals. So that number here, $22,400, is going to go in the far right column. I hope that makes sense where I came up with that number. If not, rewind that, take a look at it again, and try to figure out where we came up with that number. Now, when we're all said and done, we just write down total liabilities and owner's equity. Sorry, I spelled that wrong. Okay, so liabilities and owner's equity are these two numbers right here. I'll actually draw my arrow. All right, it's these two numbers added together. Go ahead and add those together right now and put that in this box right here. Wait, it's $28,800? Fancy that. So what we have here is liabilities and owner's equity is equal to assets. We just balanced the worksheet. Assets, $28,800, is equal to liabilities plus owner's equity, $28,800. You've just completed all three financial worksheets. Now we're going to be able to close the books, and we're going to do that next week. But the plan is to have a little class meeting before we do that. We'll talk more about that on the Google Classroom. I hope these all helped. Again, if you have any questions, just post them in the comments of the YouTube channel, and I'll be sure to get to you, all right?